We got past yesterday's 75 basis point rate hike from the Fed pretty well until Jerome Powell said that we have a ways to go. So now my question is, will a hot jobs report tomorrow morning put the final nail in the coffin for this market for 2022? Welcome to the 12-minute trading market minute for Thursday, the 3rd of November. Tomorrow morning at 8:30 a.m. Eastern Time, we have the employment situation, also known as the non-farm payrolls report. And it's going to be very important because we're looking for a consensus of about 210,000 jobs added for October of 2022. Now, if this comes in hot, and there may be some indication that the Fed already knew this number, and so this is why they went ahead with 75 basis points and said that, hey, we're not even close yet. We have a ways to go. So this is my concern, is if it comes in hot, well above 210,000, even though the consensus range is up to 250,000, but if it does come in hot tomorrow, this is going to put a lot of pressure on equity markets. We're going to see the dollar continue to strengthen and go higher. We're going to see rates go higher, and we're going to see equities, especially the NASDAQ and Russell, probably drop quite a bit. Now let's move over to the S&P 500. This is the S&P 500 futures contract, and we're just looking at the continuous contract, and we've seen this rally since the last CPI report, where we had this great reversal candle with a lower low and a much higher close, and then that started this little relief rally to the upside. Okay, so far so good into last Friday, where we got this big upside green candle on Friday. And since that point, every single day this week has been to the downside. So tomorrow morning, we've started to print tomorrow's candle already after 6 p.m. And so far, this has been a normal pullback. So this has been profit taking. This has been the shorts are loading up again. But so far, this is a normal pullback to a 50% fib retracement. So far, so good. If we see the price bounce from here, then this could actually create quite a short squeeze. This is what we call a slingshot movement, where the price pulls back, almost like loading up a slingshot, and then boom, off it goes. So that, in a perfect world, if we come in at consensus or maybe smaller than that, might produce something like this. However, if we do get a hot report, then I would expect the price to continue to go down. And the level that this needs to hold is right here at 36.64, which is the 61.8% retracement of the entire swing. We use the 61.8% fib as kind of the delineation between, in this case, bull and bear. If this price gets undercut, especially on a closing basis, then that increases the probabilities that we're going to go all the way back down here and fill in the triangle. Now, we've been through this before. We had the same thing happening here. That filled in the triangle. Same thing happening here. Nice little rally, filled in the triangle. So is this going to be another case of filling in the triangle with a weekly lower high, just another bear market rally? Or will we escape this one, at least for another few weeks, with a relief rally to the upside? Again, the jobs report is going to be a massive indication on whether or not we head higher or lower. And also, it could be somewhat influenced by next week's election. If we have mixed results, if we have split leadership, the market loves gridlock. It may celebrate that. So for now, though, we're going to just look at the jobs report in this week into tomorrow, and it's going to be a binary outcome. Either we're going to be rallying up from there on a weaker report or less than consensus, or if we do hit more than consensus, chances are that we start heading down. That's it for today's Market Minute. We'll see you in the next one.